Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets remain weak on the weekly options expiry. Banking stocks are underperforming while the volatility index is flat. Yes Bank is the top Nifty gainer today. The bank has delayed its third quarter results, saying it is engaging in capital raising with foreign investors. Irctc continues to trade with double-digit gains post its third quarter numbers. The management says it is confident of maintaining its growth trajectory going ahead. And BBCL along with Nestle India are the two Nifty companies that will report their December quarter numbers today. Good afternoon, Davina. Seems like there's weakness across the board today.
Yes, across the board and across the globe, Navneet. It looks like a trend that has been picked up from what we're seeing across the board in terms of a risk-off sentiment because of the new numbers that have come in from coronavirus. So, number of cases confirmed each day, and this is a day-to-day snapshot. And you can just see 12th of February, the sudden spike in number of new cases, which is almost closer to 15,000. That it looks like it's already spooking the markets a bit. And across asset classes, there is that little bit of a risk-off mode that's come back in. And this is contrary to the notion that the cases are peaking off, and it looks like it's going the other way around now. So we'll have to wait and watch till more details come out on this. But number of fresh cases have also picked up. The number of deaths have picked up as well. So that's a big concern. Coming to our own markets then, to take a look at what the indices are doing. So there is some bit of a decline here as well. You've got the Nifty 50 down about 0.5%. Not a major sell-off, but you've seen almost a 1.7% gain over the last 2 days, giving back a bit in today's session. So 12,147 for the Nifty. This is the lowest point of the day. On the Nifty Bank, that too looks weak. You've got a closer to about 250 points, almost 300 points now down for the Nifty Bank at the lowest point of the day for that too. The heat map will tell you where exactly are the pain pockets. A few of the names though are holding steady, the likes of Yes Bank, which on the back of the possibility of fresh interest coming in from new investors is active about 6.5%. Dr. Reddy's as well, post the announcement of the deal with Walk Hard, you've got a slew of brokerage reports which are sounding positive for Dr. Reddy's, and that's up about 3.5%. Titan has moved up, and SBI, digestion of the fact that SBI IPO could happen at the end of the month, and this could be an incremental positive for SBI itself since it's a major stakeholder. Z is up today, Sun Pharma, Vedanta, Gale. What's losing out is IndusInd Bank. Remember, yesterday the stock was down heavily. Today again there's some selling pressure that's coming in. ICICI Bank is down. Coal India, Tata Steel, Adani Ports, all of these names looking weak. And HDFC Twins as well, the heavyweights there causing a drag on the Nifty Bank. To the broader market space then, and the last few days have been a streak of underperformance versus the benchmark index. Today almost at par, you would say. Nifty Mid Cap Index is down 0.5%, while the Small Cap Index trades marginally flat. Individual stocks then, and a few movers from within that pocket. Torrent Power does well on the back of good set of numbers. Ipca Laboratories too as well. Ajanta Pharma post its results has been doing phenomenally well, and that too is up in the session today. IDBI Bank, Torrent Pharma, Aditya Birla Fashion are some of the other names, and Nalco finally takes a breather from the selling and is up in today's session. Natco Pharma, however, is down 5.5%. Indraprastha Gas, you've got Mahanagar Gas. Most of the gas companies are down in today's session, and Sterlite Tech is down about 2.5%. There's the mid-cap space. From within the small cap space, there are a few big movers as well. So quickly highlight that. Venki is well spun. Lemon Tree, Karnataka Bank, Ircon International are some of the bigger movers, and Avanti Feeds comes back to about 2.5% higher. Amongst the losers, you've got Care Ratings. SpiceJet is under as well, about 4%, and then you've got the likes of MMTC and Spark. 2 days on a trot is losing out, but the big show stealer and the showstopper today is IRCTC with the kind of results that it posted. Management commentary has been strong, and through the day it's maintained its gains. I think double-digit gains for IRCTC. Right now, up 173 points, 12.5% higher for IRCTC. But also important to keep a track on what's been happening in the futures and options space. Today is the weekly options expiry. Navneet is going to highlight that for us. Navneet.
Thanks for that, Davina. Well, the selling which is coming across the board today, I think just Pharma Index is the saving grace, because that's the one which is lending some bit of support. So Nifty Pharma is just marginally in the green. But if you look at the Nifty futures, there is some bit of build-up actually which has come by. Remember, last 2 days there was a rebound, but it was a short covering bounce. And Nifty premium has also fallen to levels of about 11 points. And Nifty Bank in the last two sessions has been seeing more of positions. So as of now, almost 24% increase in terms of open interest, while the Nifty Bank has slipped way below its 50 DMA now. It's trading at 31,200, and the support here will be around the 31,000 mark. Where can you expect the expiry to take place then? For Nifty at least, we're looking at 12,100 put, which continues to see aggressive writing. Of course, the premium is falling because of time decay here. And you've also got the 12,150 call, which has seen significant writing. So looking at the trading activity, I think it looks like the expiry will take place in that range of about 12,100 to about 12,060 or 70. Let's see where we are headed. But for the time being, Nifty is down about 50 points in trade. Individual stock futures, Torrent Power has reacted positively to very good set of numbers. Margins expanded by almost 470 basis points, and this one's also gone up on good amount of volumes on the cash side. As you can see on your screen, the white line is projecting today's volume vis-a-vis the average volume of last 20 days being projected on the blue line. The stock's at 52-week high, long position seen on the future side, 18% higher for this one. Pull up Torrent Power. We're not talking about Torrent Pharma. Torrent Power is up about, I guess, 8 to 9% in trade. So that was Torrent Power, by the way, which came out with the numbers. IGL is the other one. We'll talk more about the gas distribution company and the sort of impact they will have on back of CS report, which has said that open access regulations may have an impact. So we've seen some shorting coming by actually for both IGL and MGL. And NMDC is the other one, which has slipped below its 100-day moving average. The stock's corrected nearly 20% from the 52-week high levels that we had just seen on January 20th. So it's come off from those levels of 138, 139 to currently at about 110 on the spot side. The stock's down about 4%.
All right, then let's bring in our market voice for the day, Manish Jain, fund manager at Ambit AMC. He's joining us right now on the show. Manish, thanks very much for taking out the time. Good afternoon to you. What's the call at Ambit with regards to the overall market sentiment and investments to be made at levels of about 12,100 right now? We're still just about 2 or 3% off the record highs. So is it still a prudent step to deploy much of the money?
Oh, absolutely. I think if you look at what has happened in the last 2, maybe 3 odd months, is the fact that we are now starting to witness a little bit of a green shoot as far as the broader economy is concerned, right? So if you look at the PMI data, if you look at the GST collections, and also some of the recent budget announcements, if they are to go by, and if you combine that with the probability of 2 consecutive good crops, the winter crop and the summer crop, I think we have a winner at hand over here. Not saying that we are going to see a V-shaped recovery immediately, but stabilization is something that is definitely on the cards, and eventually in maybe 2-3 quarters time frame, at some point of time we will see a slow steady recovery starting to come in, and that's I think what market is starting to build in. Now if you look at the movement of the broader market across time frame, last year it was pretty much a risk off trade. So there was this whole thing about valuation and polarization which kind of played out, and only a few stocks were driving the broader markets. But now if you look at in the last 1.5 months, it's primarily the small cap index which has done the best, and then followed by the mid cap, and Nifty is actually the worst performing amongst the all three. So there is definitely a bit of a risk on trade which is now starting to happen, the polarization which is now starting to reverse a little bit. And I think it has something to do with the fact that people do believe now that there is a stabilization phase which is going to come into the economy. And I think it's essentially because of that. So from a 1 to 2 year perspective, I think it's a good time to invest.
Okay, from 1 to 2 year perspective, a good time to invest. But making allocations and choosing the right spaces to invest is also critical at this point. For a brief period in the start of the year, one would have assumed that the markets have started to readjust, and the mid cap and the small caps, which had moved away from mean significantly, were starting to revert in terms of some positive sentiment. But it looks like now that's gone back to the theme of polarization. Do you feel that it is more about specific stocks and about specific businesses that you invest in, rather than whether it's a mid cap or a large cap company?
So I think, one fundamental rule that we at Ambit always tend to follow is that irrespective of the time frame that you are investing for, and irrespective of the risk appetite you have, one thing that you never compromise on is essentially quality, right? So always invest in quality, and more importantly, rather than getting obsessed about the return that you're going to generate, it's more important, about the purpose of the investment. Why are you investing? I think these are some of the questions that you need to ask. But having said all of that, in terms of the sectors that we are positive on sitting where we are right now, I think discretionary consumption, I think private sector banks, I think pharma, these are some of the broader sectors, and entertainment. I think these are some of the broader sectors where we are kind of positively inclined towards, and I do believe that there is a decent bit of a money to be made across three spectrums: large cap, mid cap, small cap. But if you have a slightly higher risk appetite, I wouldn't shy away from taking a big bet on the small cap side. I think 2020 is going to be the year for the small cap index.
Hi Manish, good afternoon. Since you're sounding quite bullish with regard to the recovery so far, at least this year we've seen for broader markets, and as you suggest, you wouldn't mind deploying money into more mid-cap as well as the small-cap stocks. Give us an indication, what sort of returns do you expect from this space going ahead? Because last 2 years, as we know, we've been underperforming compared to the frontline indices. What sort of returns can an average investor expect from this space?
See, if you look at the mid-cap index and the small-cap index behavior from a long-term perspective, it's always been a bit of a pattern, right? So you typically make, you get that one opportunity every few years to make money in the small-cap space and mid-caps. Small-caps typically, has the shortest living rally, right? So you make money every 4 or 5 years, thereabout over there. So whenever the opportunity to make money comes, I think it's a very significant amount of money that can be made. Certainly in very, very high double digits. So I wouldn't, shy away. And if you look at the performance of the small cap index in the last 1.5 months also, our emerging giants fund that we run over here in Ambit is up almost about 13-14% so far. So that's clearly an indication that, if you have a quality portfolio in the small cap and the mid cap space, there is a very significant amount of money to be made in 2020 without putting in a very specific number on it.
Manish, what are your thoughts on the recent inflation numbers that we've received for the month of January? Because I think there is some bit of concern, low growth, high inflation. In fact, retail inflation is the highest that we've seen since May 2014, that India could be entering into that stage of stagflation. Not sure if that's happening right now, but if that happens, do you see that having a major impact on Indian equities?
See, one immediate impact that the inflation numbers that we've seen will definitely have is that you're not going to be expecting a rate cut anytime soon, right? But that's more like a no-brainer. But more importantly, if you analyze the data in a little more granularity, you'll figure out that the core inflation is still pretty much okay at around 4.2% or thereabouts. So that's not a very, very major concern. I think the most pressing need of the hour is to focus on food inflation, right? So that's running at an all-time high right now at about 13-14%, a multi-year high rather, at 13% plus thereabouts, which is basically fueling the overall CPI inflation. And I do believe that that is something that can be controlled. So when you look at the way vegetable prices have kind of come down in the recent past, when you look at the reservoir levels which are at a record high now, and if you combine them with the hope of a good winter crop which is going to come through, I think you'll see this coming under control fairly quickly. So inflation at the moment is high, but it's not something that I'm going to be overtly losing my sleep over. I'm going to be much more focused on the overall green shoots, the other parts where I'm getting a little more exciting data at the moment from the broader markets economic perspective.
Would you say then that while obviously keeping all of these moving parts in mind, up until now, when the weaker spot was consumption for within the India growth story, for some reason the results of most of the companies within that space, barring obviously the auto companies, have not been bad. So people are ready to pay any kind of hefty premium to make sure that they're a part of that business. Be it the likes of Avenue Supermarts, they've shown there is a visibility of growth. You've got HUL, I mean, that's been a stalwart in the industry itself, and the kind of brokerage reports suggesting that the growth doesn't stop here and just gets amplified from here on. So do you feel that you still should have consumption as an important part of the portfolio?
Oh, absolutely. I've always been a believer in the consumption story. I've I've looked at the consumption sector all my life, and I do believe that when you look at the overall demographics that we have in India, right, with an average literacy rate of somewhere close to 74%, a very, very young population with an average age of less than 30 years, and yet the per capita GDP number being somewhere close to $2,000, there's only one way we can move in terms of aspiration, in terms of incomes, and in terms of the brand play playing out is up, right? So from a long-term perspective, consumption is always going to remain a very, very relevant theme in India. So that will continue to be a core part of my portfolio. The only thing you need to keep in mind while you're playing consumption is to be cognizant of the risk-reward strategy. Like you said, not willing to pay any multiple for any kind of growth, but the risk versus reward should balance out. So if something is, giving me about 18 to 20% kind of a steady profit growth over the next 10 years, I wouldn't mind paying anything less than 50 times, 40 to 50 times P multiple for that particular stock. But that's broadly the range. But I wouldn't buy something which is like 100 times and growing at 30%. That's clearly a very skewed risk reward. So buy consumption in your long-term portfolio as a part of your core holding. Keep invested in it, but be cognizant of the risk versus reward strategy over there in that space.
Got that. Manish, point well taken. Thank you very much for joining us this afternoon. There's a quick market opinion coming in there. For the indices, we're still down about 0.5%, 12,148 for the Nifty, while the Nifty bank struggles around 31,207. Most of your banks are under in today's trade, and obviously then you've got to focus on what's been happening within the oil and gas space also, particularly the gas segment now with the open access and the changes there. It could definitely be a big negative impact for most of these players, particularly for the likes of IGL and GL, which have been enjoying pretty hefty returns there. That could suffer. So you got them down about almost 4.5% apiece. But aside from that, it's going to be earnings reactions that we're going to be keeping in mind. And like we said, today's day, we're seeing good moves in stocks like Torrent Power, which have delivered good set of numbers. Irctc, that's up about 12.5%. But let's also keep in mind that a few other names have come out with results. So India's largest public sector shipyard in terms of docking capacity, which is Cochin Shipyard, has reported a steady quarter with profits rising over 30%. Margins too remain stable at 22%. Let's discuss the quarter gone by with Mr. Madhu Nair, the CMD of the company. Mr. Madhu, thanks very much for taking out the time. Let's break it down into the overall shipbuilding business as well as the ship repair segment, and what affected the ship repair segment this time, because that segment looked a bit weak.
Asif, let me talk about the shipbuilding first. The shipbuilding this time has done very well because the fund flow, the revenues from the indigenous aircraft carrier phase 3 part has started flowing in. We had said last time, we had signed the contract for the phase 3 contract, which was in the works for some time. We were not able to recognize revenues on these works in the absence of the contract, but now that the contract is there, the revenues have started flowing in. So that's what is doing good for the shipbuilding part. On the ship repair part, this is actually on expected lines, while the overall Q-on-Q basis revenues are lower. That's because last year we had one-off large vessel, which was a indigenous aircraft carrier, Vikramaditya, the serving aircraft carrier, which had come in for repairs in the shipyard last year, which had given us significant revenues. Just that project was 450 crores in last year's turnover. So this year we always knew that such a project was not there. So it's on expected lines, no causes for concern as we're speaking. And we were on the overall revenues also, this was expected. So we are having a higher proportion of shipbuilding as compared to ship repair this time.
Okay, so just want to get a sense from you. So while obviously you're saying this could be a one-off impact on the ship repair segment, overall going forward, maybe 2 or 3 quarters down the line, do you see the ship repair turnover increasing dramatically? Because you are also looking at, you've gotten profit sharing agreements with both Mumbai as well as Kolkata ports. So those will start to kick in. And then what kind of revenue turnover do you expect from each of these ports, particularly with regards to the ship repair segment?
Exactly. See, we are expecting revenue flows to come in from Mumbai. Mumbai, we have now had almost 1 year of operations, but the initial part was slow because we are setting up the processes and the systems over there. So now it's more or less stabilized. We have now seen within the first 9 months, we have a fair bit of money that's come in, but we should see much more coming in Q4 of this year, and as we move into next year, ship repair revenues from Mumbai would be much more significant. So this is definitely going to add on to our overall ship repair revenues next year. It's not going to be, see, if we are comparing again with last year, it is not going to be just a massive jump or something of that sort, but it's going to be steady increase, and the Bombay revenue should definitely cross 120 crores next year.
Okay, and what about Calcutta? You have also, you've acquired 100% stake in 2 of those dry docks in West Bengal. How do you think
Correct.
they will start to contribute to the financials?
Calcutta, very, very marginal, because Calcutta did not have an ecosystem like Bombay. Bombay already had an ecosystem. But Calcutta, we are pleasantly surprised. We have actually handled 2 vessels already in Calcutta after starting operations. But then there are a lot of things which we have to do. We have to do a little bit more of a upkeep in that facility. So I'm not wanting to report too much from Calcutta. We'll get 20-30 crores coming from Calcutta. That is the expectation. But anything more than that, I'm not in a position to say at this stage. It looks, prima facie, it looks a little bit better than what we probably would have expected 6 months back.
Okay. So let me come to margins then. Yeah. Margins, shipbuilding at 23.5%, which was an improvement. Ship repair has dropped by 13.5%. Overall, consol margins, EBITDA margins remained flat. Would you see an improvement, overall improvement there? And also, just add to that, any focus that you have with regards to your already laid out plans for expansion? I believe you're looking at more volume-based business now with regards to fishing boats. You're eyeing Indian Navy projects. How is that going forward? And you're also looking to enter private tourism as a space. How are all of those things falling into place for you?
See, margins, we should be, because we are already, the EBITDA margins is already extremely healthy. And in this business, I can't continuously keep on raising the margins. I think we are done well. The margins are at very healthy levels. So the focus would be on to sustaining those kind of margins, because I feel it's very healthy margins. Ship repair, as you said, see, that 13% that's come in, it's a little bit because of the nature of the business. Because if you really see just the previous quarter, it's much higher. So you shouldn't read too much into it, because if you look at the 9 monthly figures, the ship repair margin is around at 25%, which is where we are generally. So on a quarter-to-quarter basis, accounting policy point of view, a little bit lumpiness, the way we recognize revenues, only when, so those are coming into that figure. So that 13% is not really a point for concern. So margins should be remaining steady at around the levels we are having now. Coming to the capex plans, 2 large expansion projects here in Kochi is going generally on steam. Even though one of those projects, the ISRF, has faced some difficulties because of some small issues which I had on the ship lift supplier side, and the way the infra industry is moving, we are seeing some slowness over there. The other project, the dry dock, is moving very well and should be moving forward towards a completion in 2021 as planned. We are also doing through our subsidiary company, we are investing about 150-160 crores in Calcutta in a new shipyard. That's going very well. 2021 February is the completion date targeted, but in all probability we should be completing it by end of this year and starting operations out there.
Okay, sir, just one question from my side. Are you bidding for any new projects in the near future, in the current quarter, or what's the road ahead with regard to FY21?
Shipbuilding projects, we have bid for quite a bit of projects with the Navy and the Coast Guard. There have been a few projects that's come in. We have put in the bids, and there are a few projects also which we are bidding. And we are we're definitely hoping to be amongst the winning bidders in a few of these. But it will take some time because the naval projects, as you know, when a bidding happens, it's typically an 18-month period where they ask for a validity. And we hope for the next 1 year, 1.5 year, some of these bids will see fructification.
Any ballpark figure? What are the average size of these orders?
Oh, there are mid-sized ones and a couple of fairly big-sized ones. I'm not in a position to discuss this, but then good figures are there.
No worries, sir. Mr. Nair, thanks a lot for joining us and taking us through the quarter gone by, and all the best to you for the coming quarters. That's the management of Cochin Shipyard. Good set of numbers coming by, but I guess it was the shipbuilding repair space which for the last 2 quarters has not been doing well. The margins have been slipping there, and the stock's not done anything. It's just down about 1%. Staying with the earnings then, Aarti Industries reported a subdued quarter with a 3% growth in its bottom line, while the operational performance was subdued. Let's discuss the quarter gone by with Mr. Rajendra Gogri, who is the CMD of the company. Mr. Gogri, good afternoon, and thanks a lot for joining us. The top line, there was a degrowth of almost 7%. Margins have been sustained at levels of about 20.6%. Could you take us through the quarter and also tell us what led to this sort of degrowth in the top line?
Yeah, the top line degrowth is mainly because the home and personal care has been hived off, and previous year number includes the home and personal care also. If you take that out, the top line is virtually flat compared to the FY19 Q3.
So like-to-like basis, I'm just looking at the segmental revenues as well. The specialty chemical space, it's just remained flat. I think there was a marginal degrowth of about 1%. What went wrong in that segment? There was no growth seen.
Yes, we had mentioned in earlier con call and also results that 2 sectors which are impacted one is the agrochemical sector in US. This year the season has been quite bad because of the weather. And overall global automobile sector is slowed down. So that back impact has come on. We are basically intermediate suppliers to them. And that's why we have not seen any significant growth in top line.
Do things change, sir, from here on? How's the current quarter been so far? And also, if you could share with us, is the company impacted due to coronavirus outbreak?
Yeah, current quarter also will be more or less similar. The same impact will continue. But this coronavirus is a new factor. And as you know, we are totally backward integrated. So in our chemical line, we don't see any negative impact, but we may see some positive impact because of the increase in demand in India as well as for export, which can push some volume and margins. So overall for chemical business, our specialty chemical business, definitely it should be a positive. And this 4th quarter will be commissioning our major projects, which should be a good volume growth drivers for FY21 and FY22.
Okay. Is this the startup of the new CRAMS contracts that we're talking about? And what kind of a growth?
The first 2 contracts which we have signed, those will get commissioned in Q4. So all the volume impact will start coming in from FY21 and FY22.
Okay. So the estimate around that is that could possibly add another 20% growth to the top line. Is that a realistic estimate?
Yeah, maybe even more than that at higher level. At full level, it will be almost more than 20%. The top line growth for specialty chemical.
All right. Let's talk a little bit more about some of these downstream products as well. I mean, you've made significant brownfield investments to increase the NCB and chlorination capacity. So how will that play out in terms of reportage and reflecting on the financials on the downstream products?
Yeah, nitrochlorobenzene also we are expanding in some of the downstream also. So that in addition to our 2 major contracts, some of the other nitrochlorobenzene and downstream also we are expanding. So those volumes also will start kicking in from further on next year onwards. So we will see a good volume jumps coming in the next couple of years.
Okay, so 20% plus growth from the CRAMS contract, downstream products, another 6 to 7% addition to the top line, if I'm getting this wrong, and that will also, downstream products will also aid to margin expansion, 200 to 250 basis points. Will that support?
Yeah, overall margin will expand because there will be value-added products. So as a percentage margin also at the constant raw material price, going forward the margin will expand.
Okay, could you give us a rough estimate of what do you expect to close, or rather FY21 margins to look like?
We have not done the full budgeting yet, but at least 1 or 2% margin at the constant raw material price, there should be an increase.
All right. And finally, do you expect, what kind of utilization rates are you running at? Do you expect that to pick up, and any capacity expansions further to what we've already discussed?
No, some of our nitrotoluene and PDA, that ramp-up utilization will further increase next year. That is our project which were completed in last 2-3 years. So that ramp-up is continuing, so that ramp-up will take place. And so that will be impact for those also.
Okay. All right. We wish you all the best, Mr. Gogri. Thank you very much for joining in. So lots of things to keep an eye out on with regards to, going forward, and new CRAMS contracts coming in. More than 20% increment on the top line is what they expect. EBITDA will expand more than 100 to 150 basis points according to the management. So incrementally positive signs coming in there.
Okay, that's Aarti Industries. Remember, the stock's done pretty well, at least in the last 1 year, but some profit booking definitely kicking in. As of now, the stock's down about 1.5 to 2%. Okay, let's move on and shift focus back to markets. Nifty is at 12,160, just marginal improvement, I'll say, recovery in the last maybe 15 to 20 minutes of trade. Nifty Bank is still down about 250 points. Let's move on and get our technical guest on board and get their strategy on the indices. Ashish Kyal of Wave Strategy Advisors joins us on the show, and we've also got Brijesh Singh of StockAxis. Good afternoon to both of you, gentlemen. Ashish, let me come to you. Would you use these dips as an opportunity to create any long position on Nifty or on Bank Nifty?
Hi, good afternoon. See, the overall trend for Nifty over short term remains positive. However, we are seeing some kind of a profit booking from the higher levels. So I would rather use dips as a buying opportunity. I think the trend will remain intact as long as we see that level of 12,000 psychological level remains protected on the downside. So use any dips towards the level of 12,100, 12,120 as buying opportunity. Maintain a stop loss of around 12,000, and we can then expect it to move back towards 12,250. I think essentially it's going to be in range bound. So buying on dips and selling on rise is the ideal strategy one should follow.
Buy on dips is the strategy with the target of 12,250 on Nifty. Brijesh, what about you? Would you also buy at these levels, or you would wait buy?
Good afternoon, Ambit. And see, if I talk about the Nifty right now on the hourly chart as well as on the daily chart, the consolidation phase has been going on. No doubt what Ashish has said has been right. Like psychological level of 12,000 has still been holding on. But whereas on the higher side has been concerned 12,250 or say 12,270 has been acting as a resistance. Then after that we have seen profit booking, and then there is a mild negative divergence seen on the hourly chart on the oscillator front. So, but that doesn't confirm purely for a sell side. So I would be avoiding Nifty as such for going short or long in it. So my strategy would be totally neutral on a Nifty front. But whereas the Bank Nifty has been concerned, definitely chart for selling looking promising. So like right now, if I talk about the Bank Nifty, it has been quoting at 31,235, taking the Nifty spot value. So it's been giving a confirmation on the sell side. Any rise or present rate can be used to go for a sell side with a strict stop loss of 31,450, and again look back for the target of 30,900 or say 30,950 in a couple of days scenario.
Okay, so sell call a Nifty Bank and sell at 3,1. 125, and the index is currently at about 31,240. Remember, last 2 days Nifty Bank was trading around its 50 DMA, and it also touched the mark of 31,500, which has turned out to be a big resistance. We've not been able to close above 31,500 for a really long time. Okay, let's get you some stock specific ideas as well. Brijesh, I come back to you. Any individual stocks that you have for our viewers?
Two stocks are there, one on the buy side and one on the sell side. Now I'll start with the buy side first of all. The Torrent Pharma, the daily charts had been trading in higher tops and higher bottom formation, which indicates the more upside for the stocks. Whereas the stocks had made a base formation at a zone of 1900, then after that it made a base at 2020 around, and after that it moved up. Now present rate at 2060 around, the stock has been quoting, so present rate can be used to go long or till dip till 2055 around, with the stop loss of 2030 and play for the target of 2125 around. Time frame to hold the counter would be a couple of days. Another call is on a sell side. So IndusInd Bank, if we check it out, the IndusInd Bank chart on the weekly time frame, the stocks had been trading with the lower tops and lower bottom formation. And if we draw a Fibonacci extension value, taking this lows and the highs, the 100% retracement value comes at around 1125 zone. And still, even the stock on the daily charts had been hammered with increase in volume. So present rate at 1230 zone, the stock has been quoting. One can go on a sell side with the stop loss of 1280 and play for the target of 1125. Time frame for this for this strategy would be 2 to 4 trading session.
Okay, Ashish, what are your stock ideas?
The first stock will be on the buy side, will be Triveni Engineering. We can clearly see it formed an inverse HNS pattern, which is like a bullish pattern and is giving a breakout in today's session. Also from wave perspective, it seems that fourth is complete and fifth is starting on the upside, which can give a target of around 86.90. So one can go long on Triveni Engineering, keeping a stop loss of 79.90 for the target of 86.90 on the upside. The next stock on the buy side is going to be Titan. We can clearly see there has been a very strong buying emerging across the consumption space, FMCG especially. And Titan has managed to show a very strong rise from 1180 levels to 1280, which looked like wave 1. Then we have wave 2 in sideways action. Now the third is starting. It looks like that way, which can be very sharp and fast. And we can expect Titan to reach towards the target of around 1360 on the upside. And one can maintain a stop loss of around 1250 on the downside.
Okay. Titan, in fact, has been a positive call off late since, from quite a few analysts. The stock now at 1300, so not bad going post its results. Its stock's doing well. Kunj Bansal also joins in of Sarthi Group. He's here with us on the show this afternoon. Kunj, good afternoon to you. We are almost done with the earnings season. Any particular surprises, according to you? We've got few numbers today, extremely strong set of numbers by a few companies that have been reported, much to the surprise of investors. Do you feel that Q3 particularly was not all that bad?
Yeah, so you are right. The results have largely been in line with the expectations. Let's keep in mind that going by the slowdown that has been affecting the Indian economy for last few quarters, the slowdown, the expectation was anyway low. And as I said, so the results have been in line with the expectation. Within that, if we were to look for pockets to significantly differentiate, insurance companies probably they have come under question after the ATC benefit has been kind of removed in the budget. But before that, if we look at the December quarter performance of the insurance companies, that has been very good. So depending on what parameters we take, APE or VNB and all these, the growth rates have been anywhere in the range of 20 to 40%. So that was one clear bright spot. On the other hand, auto ancillaries, auto OEMs as well for that matter, have been one clear negative pack, not surprisingly negative, but in line with expectation, with the top lines or the volumes down anywhere in the range of 15% to up to 25-30%. So these have been the two extremes. In between, again coming on the positive side, despite the so-called slowdown, consumption slowdown and all, retailing companies have reported very good numbers. Although there are very few listed players in that, but that is a space which has given a positive numbers. City gas distribution companies expectedly have given good numbers. More importantly, the trend has been that because the top line growth was not expected anywhere, wherever the margin growth has been there, those companies have got rewarded handsomely. So these have clearly been some of the observations of the result season. Now, of course, suddenly we have this whole coronavirus things coming in. So instead of the domestic slowdown, the analysis has started from the point of view that okay, in this quarter of Jan, Feb, March, and more importantly April, May, June, can that be an effect?
Okay. Since you mentioned about the city gas distribution companies, Kunj, I just want to apprise our viewers as well the reason why the stock, both IGL and MGL, have seen that sharp correction. So I believe they're recovering from the lower levels of the day. IGL is still down about 4 to 4.5%. There's a note which has come in from Credit Suisse. They've highlighted open access regulations could have an impact on these companies, and they've also stated that the return works out to be 10% versus current 35% for both IGL and MGL. And the bottom line impact, I remember the report had mentioned for IGL and MGL can be anywhere between in the range of 10 to 15%, while for Gujarat Gas will be just in that range of about 6 to 7%. And of course, they've also said that new competition does not need to put any capex as they're allowed to access till last mile connectivity, and CNG stations are no longer covered under the infrastructure exclusivity. Though I remember Credit Suisse had come out with a report a month back also on this particular space, and they said they expect the gas demand in India to almost double in the next 10 years. And we know how these city gas distribution companies have been performing really well. That's the EPS impact, by the way, they've highlighted for IGL, MGL between 13 to 14 and Gujarat Gas 6 to 7%. Kunj, since you also highlighted the city gas distribution companies, of course the numbers have been good, and it's clearly visible the way the stocks have also moved in the last 3 to 4 months. What are your thoughts on this development that the open access regulation could have an impact on their EPS going ahead?
So this is not a new development. The talk of this has been in the offing, and there have been indications by various regulatory agencies, regulatory authorities of this thing. So as I said, this is not something new. The point is there is always an advantage to the prime mover. So these are some of the companies as you named which have already built networks, which already now have the experience of running the businesses, which to some extent have a brand attached to them. So they will have that advantage which will continue. Of course, competition will come and should come because India has a lot more to go, especially in the retailing of gas distribution. I think, in my view, today's short-term impact could be because of multiple reasons. One, of course, the stocks have been going one way up for quite some time over the last few months. We saw the results, which, as I said earlier, have been reasonably positive, in line with expectations. So the consistent rise over the last few months has made the valuation expensive. Market on an overall basis is showing signs of topping out, so which is where this tendency tends to happen, that okay, whichever sectors have not got corrected, they tend to get corrected. More importantly, again going back to the fact of the coronavirus and China impact, the demand for commodities seem to be coming down, and crude, although was up overnight in the international markets, but crude and gas prices have been coming down. Gas prices even otherwise have been quite low. Now, in that scenario, there can be multiple impacts, one of which could be that at some point of time, these companies will have to pass on the benefit of lower gas price to the consumer, and depending on the overall calculation, can it affect their margins? So that is one question which is there in the minds. But as I said, the regulatory changes have been in the offing, they are not new, and to that extent, they don't affect the business of these companies.
Okay, so that's city gas distribution companies. Gujarat Gas, remember the report has also highlighted it doesn't get impacted too much. I want to pull up Dr. Reddy's. I think it's a day's high. It's up 4%. It's also at its 52-week high. So good gains coming in. Remember yesterday Darshan highlighted for us the contours of the deal with Walkhard, and today a couple of brokerages have also said that this particular deal is EPS accretive. They are acquiring almost 63 to 64 products from Walkhard and also the Buddy unit. Kunj, coming here on Dr. Reddy's, which is doing well at 52-week high. Yesterday they struck a deal with Walkhard. According to you, what are the future prospects, and is this deal good for the company?
Frankly, I don't track this company in a great detail, so I won't
No
be
worries.
able to give
Any
an appropriate
favorite, Kunj, then in the pharma space? We've seen off late a lot of stocks moving around. We've seen Divi's also moving up in trade, and a lot of market experts have been betting on these companies.
Yeah, so at upfront disclosure that I hold some very small quantity of shares worth few lakhs in Divi's laboratory. Keeping that disclosure aside, how I view the whole pharma space is that there are these leaders of this space, the large cap companies. I am taking some names which are not investment or disinvestment recommendations. So we have Sun Pharma, which is still not doing anything, both in terms of share price performance as well as in terms of its financial performance. We have Lupin not doing anything, we have Cipla not doing anything, Dr. Reddy, as you rightly said, has come to a 52-week high, Wokhard not doing anything. So on one hand, we have all these biggies of the sector, which in fact some of them even on a 5-year basis are negative return up to 50% in some cases. Off late, over the last few days, maybe extending up to a month, some of the mid-cap companies within the pharma space have come in radar and have started moving up, which includes Divi's, as you said, one, which includes Natco Pharma, the other, which includes Alchem. So these are some of them, and selectively some of the MNCs have started to do well because of the increased product demand. So that's where the sector is quite showing different trends in the different subspaces, of which it's difficult to take out a uniform trend. So in my view, this will continue to be a case of selective companies based on the individual business models, individual performances, individual factors affecting them. I don't think a generalized view can be taken on the sector.
Nonetheless, it's the top performing sector of today, Nifty Pharma, which is up about 1% in a falling market. HUL is the other one. Yesterday was the star performer on the back of that Motilal Oswal note. But today we've got 3 other brokerages putting out notes which are not so exciting on HUL. You've got Credit Suisse where they've actually cut the target price to 21.50. So they're maintaining their neutral stance on this. Goldman Sachs has also cut its target price on HUL to 17.30 from 17.71. They've maintained a sell call on HUL, and they've lowered their FY20 estimate to FY22 estimate EPS by 1 to 2% to factor in slower sales growth. And JP Morgan also has cut its target price to 2100 from 2140. A quick call though, before I get a fundamental check from Kunj, I want to know if there's any sort of a trading play here. Ashish?
Hi. See, HUL had been in an uptrend very strongly. The stock has valued from around 270 levels to 2271. And if you try and look at it, for many, many days, it has not even given a close below the prior day's low. All the while, there was some consolidation in middle happening, but there was no single close below the prior day low, which clearly indicates that the overall trend will remain bullish over short term. I think we can head towards the level of 2350 on the upside, and on downside, today's low around 2220 can be an important support.
So at least on the technical side, it looks like it's going strong for the upside. Kunj, though, however, what would you make out of HUL and the earnings visibility that has been put forth by some of the other brokerages? What's your call on HUL? Is it an investment case?
Yeah, so my call on these kind of stocks comes more from the fact that given the various variables that have been affecting the Indian market over the last 2 years, economic slowdown being one, ILFS led liquidity squeeze and the impact on NBFCs being the other, the asset quality issues happening over the last few months, some of the companies going bust being yet another, and now this global issue. Before that we had budget, which because of the various policy changes have kind of changed business model of some of these companies. So here is one space on a very broader basis, let's call it consumer space. It includes consumer good companies, it includes durable, non-durables and all the other associated business, wherein the uncertainties for the growth of the business is much lower. Of course the overall slowdown is the one which has been affecting it, but because of the other factors not being present, so there are hardly any companies wherein probably a corporate governance or a promoter governance questions can be raised. Some of the larger FMCG companies continue to operate on negative working capital, so liquidity squeeze is something which cannot be a question there. The brand powers is something that continues to be a question there. So because of all these things, what is happening is the investment universe for a quality conscious investor is shrinking. Now once that is shrinking, the money is continuing to come in, sometimes by the global investors. If not by global investors, domestic investors are certainly continuing to put in money continuously in the Indian equity market. Now when money is coming in, investment universe is shrinking, so then it is the same amount of money is going into the same companies over and over again. And that is where we are seeing that the valuations have taken a backseat. The concept of buying them at a right valuation has not remained relevant for now, at least for last quite a few months, maybe more than a year or so, and currently. And that's where we are seeing that the share prices of these companies continuing to go up. In my view, in the short term, it's not as much to do with their financials or their fundamentals. As I said, it's for the reasons that universe is shrinking because of the multiple reasons. Investor wants a quality company. He wants a company with much less uncertainties associated with it, and he wants to put in money in the safe names. And that is where we are seeing the buying coming in these kind of companies. As I said, valuations being kept aside for a moment.
Yep, this is definitely one of the keepers in the portfolio, Kunj. The other one, obviously, in today's session is, some reactions to numbers, and we're talking about the good numbers, but Ashok Leyland is the other one. While the stock has recovered, the morning's move was pretty drastic to the numbers. The stock has actually gradually made its move on the upside, and now it's just about flat and marginally under. But definitely the standalone numbers came in way below expectations. The net profits were down 92.7%. An estimate of 97 crores, and they clocked in about 27 crores. EBITDA also saw a big downward tick of 65%. Margins halved from 10.3%. Raw material cost definitely saw a bump up this time for Ashok Leyland. But however, the stock's not doing all that badly. A quick chart check. Brijesh, Ashok Leyland.
Even Ashok Leyland now has a tough resistance at 84-85 band. No doubt the stock, after bouncing a level from 78, that is a 200 simple moving average value is around 70, it has bounced back. But 84-85 is a crucial level to be crossed. If it crosses, then only the short-term bearishness would be coming, would be favoring to the bull side. Otherwise, I feel from a chart point of view that 85 would be acting as a tough resistance, whereas 78 and 75 are downside are the two level where the stock might be trading. So overall trend, which I feel is that if stocks consolidate in the range of 75 to 85, it would be good. Otherwise, for a very short term has been concerned, put a stop loss of 85, go for a sell set for the target of 78 followed by 75.
Okay, good recovery seen, but remember the numbers for the quarter gone by were really weak for Ashok Leyland. But talking about the numbers and Nifty constituents today, you've got Bharat Petroleum is one of those Nifty companies which will be reporting their numbers. The oil refiner is likely to report inventory gains, which may actually offset the weak refining and marketing margins. Darshan Mehta is here to take us through what the street is factoring in. Darshan, over to you.
Yeah, 11% top line growth is something that we are anticipating. The profit obviously will be lower at 23% because of a higher base last time around. On the EBITDA front, we are expecting an EBITDA growth of 14%, which means EBITDA margins at close to 3.8% versus 3.7%. The GRMs are important. That will come in at 3.48 versus 3.38. So on that front, it looks good. First of all, there will be an inventory gain. We are anticipating anywhere between 200 to 400 crores that would come in versus an inventory loss last time around. But there will also be a forex loss that will be there. That will due to the adverse exchange rate. Apart from it, high sales volume to aid the marketing segment. Now, basically, the other trends that we are looking at is what are the key factors that we need to watch out for. First of all, debt and pending subsidy dues is something that we need to watch out for. Refining and marketing margin outlook from the government is something that we need to watch out for from the company, and status of the Kochi Petchem project is something that we need to watch out for. Any kind of clarity in terms of the divestment will also be watched out for in the con call today.
Yep, I guess that's going to be the most important thing. Darshan, thanks a lot for joining. Let's see when that divestment takes off, the big one which the street is watching out for. BPCL for the time being ahead of the numbers, not doing too much. Kunj, the oil marketing space, of course, the crude prices, they've cooled off in this year, and the recent phenomena could be due to the coronavirus outbreak. But are you a fan of this space, oil marketing companies? Have you invested, or would you advise to invest here?
Frankly, no, I am not a fan of this space as asked by you. Neither have we made investments for any of our clients, nor do we recommend. And our reasons come from the multiple uncertainties associated with the whole space. First of all, with the promoter group, the Government of India owned companies, there is hardly any clarity ever in terms of the long-term planning about these companies. If we look at the whole public sector space, banking of course comes top to the mind, and even going others, capital goods, power and others, hardly few companies will be able to count on the fingers which have been doing well or which are doing well. All others, even if we leave aside short-term 1 year, 2 year kind of performances and take medium and long-term 3, 4, 5 year performance also, most of these companies have given negative return to the investors. Some of them possibly have been a good dividend play. So those are some of the reasons. The other reasons being that the accounting for the numbers are too much in the hands of these kind of companies. They can vary the inventory valuation, they can vary the volumes, they can show some deferred numbers, show some deferred income, show some deferred expenses, and as a result it becomes very difficult to kind of model them and work out the numbers. And of course, as I said earlier, even in terms of the longer term share price performance, the returns to investors have been quite insignificant. In case of BPCL, which you were talking right now, I think the market is also being governed by the expected privatization. Now that was a hope some months ago, as if it was a hot potato right on the table, was almost getting privatized, but that didn't happen. So let's see when that happens. So these are the multiple variables that are there.
Kunj, I pretty much guessed it that you wouldn't be a fan, since the reasons cited by you are given by a lot of the market experts. But you know what? There is one company which is defying this convention that the government companies are not doing that well, and that's Irctc. Phenomenal set of numbers. It's given spectacular returns to its shareholders since the time it made its debut on the stock exchanges. Not sure if you're holding it, but if you've seen the numbers, your thoughts, do you think these numbers, these growth numbers that they've been posting, are they sustainable going ahead, considering they do have the monopoly in the rail, travel and tourism space?
Yes, you are right. So as I said, hardly few companies are amongst the public sector ownership that we can count on which have been doing well, of which Irctc is one. I saw the numbers briefly, not in detail. The numbers are good. Sustainability can always remain in question, but I don't think it's such a big pressure. Let's keep in mind that it's a company which is largely operating in a monopolistic environment. Within that, it's quite an efficient operator, and that's where I don't think that on a quarter-on-quarter wise we can see challenges from one quarter to the other, but on a reasonably medium term, on an annual basis, I think company will continue to report good numbers. So that is not an issue as much.
Okay, Kunj, we'll leave it at that. Thank you very much for joining us. Really appreciate you taking out the time this afternoon.
Thank you.
All right. Since we're on the topic of Irctc, I mean, the data points are fairly limited in terms of it being a new listing, but just the momentum in the stock, Brijesh, would that lead you to have a slightly positive bias in this stock? I know you don't have much in terms of data point, just got listed a few months ago, but just the propensity of the move.
See, for a short-term bet, it's been the trend has been positive. But at this juncture of time, buying at the present rate of 1568, I would be avoiding. If it trades somewhere around 1525 to 1540 band, then ideally one can look out to buy for a short term to medium term has been concerned. But at this juncture, risk reward ratio not in our favor. The stock has a resistance at 1590 to 1595 band. So I would be avoiding for a small minor gain. But if it trades somewhere around 15, as I said, 1540 or below that, then one can take a buy call and with the stop loss of 1510 and look for the target of 1590 or even 1595.
All right, the day's highs are already above 1600, so we're going to watch out for that one. In the meantime, Nomura India is expecting a 7% upside from the current levels for the index. We spoke to the India equity strategist Sayan Mukherjee, who spoke about the sectors that will lead the economic revival going ahead. Listen in.
At an index level, we are forecasting around 7% upside from the current level by the end of the year. I think we are forecasting some sort of recovery, a cyclical recovery. So if you look at our portfolio, it's positioned towards that recovery. So yeah, I mean, in the near term, we do see slowdown continuing. Our economics team actually is forecasting that for the December quarter, we may see a growth print which is probably even lower than what we saw the previous quarter, but then we do expect recovery going forward. So that's how our portfolio is largely positioned.
Simon, are there any changes in the weightages or the propellers of growth in terms of industries that you see for the markets, where some additional funds can come in from the FII desk, where there is interest on the back of the fact that there could be a turnaround for those spaces?
Yeah. So, if you see what we have been kind of expecting is a recovery driven by the kind of monetary policy stimulus that we have seen, right? If you look at the entire last 1 year, we have seen 135 basis point cut by the Reserve Bank. We have seen ample liquidity in the system. I mean, proactively, the Reserve Bank has been adding liquidity. It is also supported by foreign flows. And then lately we have seen actions by the RBI with an effort to improve transmission of those rate cuts. So historically, if you see, right, we see a reasonably strong correlation, a lagged correlation between liquidity and industrial growth. As we see things today, there's a complete divergence. You have ample liquidity, but growth is still struggling. So our view is that as we see this transmission happening, we would see gradual recovery taking place. In terms of the sectors that would see, I think it could be across board. To start with, we may see improved traction in consumer discretionary, but over a medium term, given the policy push, I think it would be largely investment led. So you have construction, infrastructure, capital goods. These are the segments from a medium term perspective, like 1 to 2 years is where we see revival in growth.
Simon, are you encouraged by the retail participant in the equity market right now? We've been seeing the mutual fund data coming out. There has been a pickup, and the SIP numbers on a month-on-month basis has been going strong. So the retail investor still is fully entrenched in the market.
Absolutely. So I think there has been a change, right? So we have seen, of course, the broader market has seen a lot of issues, but at the index level, the returns have been okay. It's not been a disaster, right? And I think there is a fundamental shift in retail participation as you see these sticky numbers. So I think this added to the foreign liquidity, I think augurs well for the market in general. And, from a liquidity standpoint, we remain constructive for this calendar year.
All right, and shifting focus back to markets, we've seen actually good recovery from those lower levels. I think Nifty's recovered about 20-30 points from those levels. 12,140 or thereabouts was the day's low. It's now down just about 30 points in trade. Let's go across to Sharad Dubey to find out which are those Fab4 stocks that feature in his list today. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Torrent Power. The stock is up more than 8% today, rising its highest levels in more than 3 weeks. The company came out with a good set of quarterly numbers. The operationally it was pretty strong, led by an improved performance in its franchisee and the licensing distribution business. And the margins also saw an expansion of more than 500 basis points to almost 27.3% because of reduction in transmission and distribution losses. And the company did declare a dividend of almost 11.6 rupees. Up next is Venky's, which is up almost 10.3%. It has gained most in almost 11 weeks and has snapped its 5-day losing streak. And also the volumes are trading at almost 6 times its 20-day average. Up next is Tech Saloons, which is up almost 2.3% after it came out with a good set of quarterly numbers, led by its life science revenue segment, which rose by almost 27%. And also the EBITDA rose by almost 22.9% to coming in at almost 108 crore rupees. And the last stock of the day is Mishra Dhatu Nigam, which is up almost 10.4%. It sees a multiple jump, in terms of its EBITDA, which rose by almost 3.4 times to almost 57.3 crore rupees. And also the net profit rose by almost 4 times, coming in at 60%. And the margins expanded by more than 15% to 27.6%. Back to you.
All right, Sharad, thanks very much for that. So those are the Fab 4 stocks of the day that we need to keep an eye out on. So we've recovered a bit from the lows of the day on the index. Right now doing okay. We've got 12,172, so just another 0.25% recovered from the bottom of the day. The Nifty Bank, however, not too much of a change since the last time we took a check. Marginal improvement, that's about it. SBI, though, today has been doing well. We've got the stock at about 327. Remember the excitement around the SBI Cards IPO that could come about by the end of the month, and the incremental positive upside for SBI, since it's a majority shareholder, that could be somewhere closer to 350 odd for the counter, according to some of the brokerage houses. Infosys is up about 1.5% today, and Sun Pharma gains about 1%. IT as a pocket is doing fine, so probably a little bit of the defensive bet that kicks into pharma as well as IT for today's trade. We've got T.S. Harihar of HRBV Client Solutions, who's also joining us on the show this afternoon. Hari, thanks very much for taking out the time. Difficult because it seems to be more volatile, and it's almost becoming a call per day, where you come in and you feel like the markets are going to go up or down, and that's all that you can see in terms of visibility. What's your sense on how one should probably tread this this move?
Difficult market, and I think today's market seems to be a classic reaction to the higher inflation yesterday, because generally the market is expecting a marginally higher inflation, about 7.4, and GDP in the IIP was actually estimated at about 1.94. Now IIP came in at minus 0.3, and I think inflation was at 7.5, so that's way off expectations. I think one thing it very clearly points is that no rate cuts are likely either in April or even in June. I think that is probably why a lot of the banks have come under pressure today, and I think that is what is pushing the market down. Broadly, I would believe that 12,000, 12,300, that could be the kind of a range the market would trade under. There are no major surprises, because I think most of the pandemic, the Chinese pandemic is kind of factored in, low oil prices factored in, I think higher inflation factored in, weak GDP factored in. So the only big question mark is what happens to the third quarter GDP when it's announced on 28th of February. So
you're saying the China coronavirus thing is already factored in, despite the new information that's
what happens in the Chinese pandemic is it's a kind of a neutral impact on India, because in terms of trade it's a slowdown, but then it pushes down oil. And when it pushes down oil, there is a big impact on India, because 85%.
We are a part of the global trade, no? So we will reflect what global markets are doing.
Yes, but see, oil costs are a huge difference as far as Indian economy is concerned.
It creates a macro tailwind for us.
It's a very big macro tailwind. So, I would believe the pandemic is largely
But when has that
neutral.
affected the equity markets? It seems to be moving in different divergent ways.
See, again, if you look at equity markets, it's been in a range of 12,000, 12,300. There's not much of a direction in the markets, and I don't think that any direction looks likely at this point of time, unless there are some positive surprises on the GDP, which is announced on 28th of February. So, unless that's a big surprise, I don't think that there's going to be a big breakout of this particular range.
Interestingly, I was just looking at the data for coronavirus. On January 20th, when the reporting, was at its peak, the number of deaths reported were just 2, and the number of cases that were reported were 280. And look at the number, the pace with which it is spreading is actually alarming. Number of deaths have, been over 1,300, and almost 50,000 people have been affected. As, of course, Hari mentioned, the economic growth in China could be impacted, where maybe analysts were factoring in a 6% growth. That gets impacted because of the economic activity not picking up on time. But for India, correction in crude prices creates a macro tailwind, but remains to be seen what happens to overall global equities as well, since all the factors now, be it earnings, we're done with it, RBI policy is done. I think the Indian markets will continue taking cues from the globe. Having said that, I just want to mark few stocks. Care Ratings is down about 6%. I was just reading somewhere there was some newspaper article indicating that there's some probe which is going from SEBI's side with the management. So let's see, I don't know if it's down because of that. And you've got Ircon International, which is, I think, at lifetime high. The stock's gone up almost 14% in trade. Do you track Ircon International, Hari?
Not much, but I think it seems to be largely a case with a lot of these kind of, PSU-related stocks, which appear to be doing quite well. IRCTC is another case. I think it came from nowhere and it has gone absolutely stratospheric. So I think a lot of these companies have been doing quite well. I think the main reason was that a lot of them are available at fairly cheap valuations. So I think that probably explains why, in a kind of a range-bound market like we are in today, we are getting a lot of traction on these kind of stocks.
RCTC, in fact, at current prices also trades at about 30 times FY21 earnings. So that also, according to most that we speak to, is reasonable. So let's see what that stock does. But Ashish, anything else that you've spotted in the last half hour of trade that interests you?
If you can probably look at Nestle, I think Nestle can do exceptionally well. The stock has been in a buzz. The overall sector has been outperforming, and relatively Nestle has been an outperformer stock. I think it's going to touch new highs, and it should continue the trend from here in the form of probably the third wave, which is ongoing right now. One can initiate long positions in Nestle, keeping a stop loss of 15,900, and target expectation is around 17,200, probably higher.
Okay, Nestle also comes out with its numbers today, so keep an eye on this one. An expensive stock trading around its life high levels. Dr. Reddy's, we were speaking about this to Kunj. Of course, he didn't have a view here, but first let me take a technical check since it is at 52-week high. Pull up the futures plate as well, clearly indicating that there are long positions being taken even in the futures market. Brijesh, coming on Dr. Reddy's at current levels, 52-week high, would you take a bet? If not, where do you see the resistance now on the upside?
See, Navneet, if I look the chart of the Dr. Reddy, the stocks had moved significantly from a level of 2,300 odd level, and the move is like a curve sort of scenario. Now, at this juncture of time, still momentum has been positive because the volume has increased, so do the price has increased. If someone wants to go on a long side, then I would be suggesting 32.90 around is a support, keeping that thing as a stop loss. Present rate can be used to go long for the target of 33.45 to 33.50 zone, because ideally that level would be acting as a resistance. But pure investment is being concerned, then I would be suggesting the stock has a deeper support at 2,900 and below that. And if someone is looking for a 6-month to a 9-month time scenario, then the stock can even try to touch a level of 3,600 to 3,700 odd.
Okay, 3,600 to 3,700 is a technical call. Hari, the deal was announced yesterday, and the brokerages have said it is EPS accretive for Dr. Reddy's. Looking at the valuations, I think it trades at 21, 22 times 1 year forward. Is it attractive?
I would believe yes, notwithstanding the fact that the stock is up sharply in the last 1 year. I think it bottomed around 1,700 and almost it's close to doubled in the last 1 year. So definitely a great rally. But I think there are 2-3 things that are actually changing on the Reddy front. The company used to be a leader about 10 years back, and then of course it lost out to Lupin and Sun Pharma, and I think that is gradually changing. The top management consisting of GV Prasad, extremely aggressive. I think they're now realizing that they need to focus more on the Indian market than on the US market. And if you look at the latest Wockhardt acquisition that they did yesterday, they're getting a portfolio of about 65 drugs. And it's across all kinds of illnesses, and more importantly, I think it gives them a very, very strong hold in India. So I think if what Reddy's Labs is now planning is that they are planning to increase their share of Indian market, underplay their exposure to the US market, and that is what is actually turning out positive. Unlike a Sun Pharma or a Lupin, which are still stuck to the US market formula, I think Reddy Labs has been very smart and early on the track to gradually shift out towards the Indian market. So the Wockhardt acquisition does look a little pricey, but I would believe that EPS impact should be seen from the next quarter itself. And more importantly, I think it gives them a better valuation at 21 times. I think it's one of the cheapest pharma stocks, and once it gets a bigger share of the Indian market, that should have a better impact to the valuation.
I think you got a cheaper one, Aurobindo. No?
They have their own problems. Aurobindo has his own problems.
Okay, that's the pharma space. Let me just highlight a couple of stocks. I think United Spirits is at 52-week high, and this one has had a good run in the last, I think, 6 to 7 days. If you could just pull up the last 7-day chart for United Spirits, I think we'll get a better idea. It's been moving up. I think, last 7 days, it's up almost 10% now at 52-week high. Ashish, your view on United Spirits on the chart, and also if you could share any closing strategy if you have for us.
United Spirits has shown a very sharp rise over the past few days, and the stock has continued to rally even in today's session. So I think the trend remains positive over here. One can initiate long positions. Even at CMP, it's a little overbought, but I think I'll go with the momentum. One can initiate long positions over here on United Spirits, keeping a stop loss of around 690 on the downside, which is near the day's low. And we can expect it to move towards 730 or 740 odd levels on the upside. And as far as Nifty is concerned, I would still look for, as a closing strategy, I would look for the buying opportunity in this market. Buy on dips is the ideal strategy. I think we might again head back towards 12,250. Keep an eye on that level. That is a steep resistance. Let's see if it can be taken out or not.
Right, we'll let you go on that note, Ashish. Thank you very much for joining us this afternoon. All right, in a bit we will get you a check on the dealing room, but I want to look at SBI too, on what the stock's doing. 327, we already spoke about that one. I think we got a chart check going for that one too. But Hari, what's your sense? I mean, with the SBI Cards IPO, you know, they've gotten the go-ahead from SEBI. End of the month is the expectation of the launch of the IPO. This is definitely going to be the additional kicker for SBI too, right?
Yes, but I think in the overall scheme of things, it appears to be, I think, fairly, I would say, small. If you look at the overall scheme of SBI, it doesn't look to be too large. I think the big kicker for SBI seems to be that if you look at the AUM of the SBI mutual fund, it has crossed HDFC and has become the largest mutual fund. And look at the kind of valuations that HDFC gets. I think even if SBI gets about 70% of that valuation, then SBI stock should be actually worth a lot more than what it is quoting today. So I've always been saying for a fairly long time that SBI is a very good SOTP play. Now, if you add up the parts like the life insurance business, which is substantially still held by SBI, the mutual fund business still almost fully held by SBI, and the cards business at a much smaller level, I would believe that put together there is a very strong SOTP story in favor of SBI. The bank has its own problems. 1,20,000 crores of NPS is quite big, but I would believe that the SOTP story is what is playing out in favor of the bank.
Yeah, it's been a sloth of sorts in terms of its price movement, taking in its own sweet time to make those returns for shareholders. But we'll see how this plays out in terms of whether or not those recoveries, given that extra kicker to move up further. It had gone up to about 355, 360 odd just a few months ago, but from there is struggling around these levels. Very range bound for SBI in the last few weeks. Let's get in Darshan then to talk a little bit more about what dealing rooms are recommending this afternoon. Darshan.
Yeah, good afternoon. One of the stocks that's been spoken about is Ashok Leyland, opened down by almost 5%, has almost recovered and come back into the green. Dealers anticipate that the con call that will be held over the next few days, they expect positive bit of commentary coming in. Also, they believe that, quite a bit of, cost controls were taken and the internals not as bad as what they seemed. So Ashok Leyland is something that's been spoken about. The other one which fell in today's trade is Aurobindo Pharma. Dealers indicate that some of the domestic funds are sellers. They anticipate some bit of negative news probably to come in because there's no clarity on what's happening with the Unit 4, whether it'll go scot-free or whether there will be an OAI that will come in. So that's something that's concerning some of the domestic mutual funds. And the last stock that dealers are talking about is Polycap. Some of the PMS-based funds are actively accumulating the counter. Decent volumes today, and that's what dealers are talking about.
Right. Thanks very much, Darshan, for that. So those are a few stocks you need to keep in mind. Hari, do you track Polycap?
Yeah, I call it the new Havels, because for a long time, I think Havels kind of remained the big value creator as far as the electrical equipment was concerned. Unfortunately, I think over time it became a little too expensive in terms of valuations, and also the acquisition of Lloyd's, I think, has not gone too well as far as the market is concerned. Partly because the products are a drag on Havels, partly because there have been other corporate governance concerns with respect to Lloyd's. So that has not gone down. So today, I think Polycap probably looks to be one stock which the market is looking at as a kind of a next Havels, and I think that is what is probably driving the stock so much higher.
Yep, and I think the Lloyd acquisition, it happened sometime in 2017 thereabouts. It was a lower margin business, so on blended basis, it also reduced the margins of Havels. And since then only, I think that underperformance started. And even if you look at the segmental breakup that they post quarter after quarter, Lloyd business has not been doing that well for Havels. Okay, going to pull up few stocks. Indices Bank, by the way, is your top loser right now. It's on Nifty. It's down about 3 to 3.5%. Remember, yesterday Moody's had changed the outlook outlook. They retained their rating on the company, but they changed the outlook to account for deterioration in the asset quality. Brijesh, come in here, 3.5% lower. Would you, okay, I believe you had a call on IndusInd Bank. Could you take us through the levels that you had given us? Has it met your target?
No, it's the trading is for 2 to 4 trading session, and the rate which I have mentioned is the same, roughly around 32.30 around the stock was been quoting. Now it is 2.5 rupees up or 1 rupees up. It is hardly. Keeping a stop loss 1280, one can go for a sell side for the target of 1125. The reason is that on the weekly chart, the stock is been trading with the lower top formation, and if we draw a Fibonacci extension taking the highs and the lows and again the high, the 100% retracement value comes at around 1125 zone. So probability we might see in coming days the stock might be come to and touch the mentioned target level.
Okay, so it was a 2 to 3 day call, a short call on IndusInd Bank, which is trading weak today. But just 10 minutes to go for markets to shut shop. Brijesh, what's the closing strategy? Any BTST, any STBT, or you stick to IndusInd?
No, there are 2 calls, Navneet, one on the sell side and one on the buy side. Now, the first call, STBT, would be BPCL. The charts are indicating the stock might drift down. So 469, the stock has been quoting around. One can go on a sell side with the stop loss of 477 and play for the target of 447 or 445. And one BTST would be from a defensive bet, that is IT. Then in that, Mindtree looks good to me on the charts. The stock is quoting somewhere around 935 or 936. One can play for the BTST with the stop loss of 920, play for the target of 955 and 962.
Okay, I think we missed the numbers of Adani Transmission. They were just reported 25 minutes ago. So just want to run you through them. You've got revenues up about 1.3% at 2,777 crores, while the profits shot up 32.5%. That's at 203.7 crores versus 153.7. The stock moved up the initial tick, but now has come off. Now it's just up about 0.5%. Margin improvement has been solid, so about 39.9% versus 29.6%. Transmission segment revenue also saw a growth of about 18%. Hari, you track Adani Transmission?
Yeah, not so aggressively, because I think it's been more of a company that has been in the news because of its acquisitions over the last 2 or 3 years. So I think they have managed a lot of very, very interesting acquisitions, and that has probably helped them bring down their basic cost of transmitting. So that is one thing that has worked in their favor. We need to really see how best this business picks up, because generally across India, most of the companies have struggled with this particular transmission business. So we'll really see how Adani is able to do justice to the business. But yes, I think till now, the big story as I see has been the way they have done their inorganic acquisitions.
Okay, that's Adani Transmission reacting just marginally to its numbers. Pull up Yes Bank. For a change, it's up in trade today, and you heard it that management has said they require more time to post their December quarter numbers because of the fundraising activity they are busy with right now, and they've said they will be declaring their numbers I think mid of March somewhere. Do you think it's that difficult for a bank like Yes Bank to not declare numbers on time? So what? Every company or every bank is looking to raise money.
I mean,
that shouldn't be an excuse, right?
I don't think so. I think clearly there are skeletons in the cupboard which will probably come out
They're
when
buying more time.
But I would not worry too much about results. I know that their book is a mess, so I don't think there's too much of a secret about that. My bigger worry is whether they're going to actually raise the money, because unless they raise the money in the next particular quarter or 2 quarters, their core capital is going to go below 8%. Now that is where the real problem for Yes Bank comes, because at that point of time it becomes very, very vulnerable. The moment its core capital goes below 8%, it becomes vulnerable. Now, just 2-3 months back, we had the CEO, Mr. Ravneet Gill, coming out and saying that we have got 4 investors ready, and it turned out that some of them had capital base of £100 or £200 or whatever. No, I don't think that went down very well with a lot of investors. So I only hope, I think JC Flowers is probably one name you all heard. So I only hope that these are genuine investors who are going to bring in genuine money and actually expand the capital of the bank. But it still remains to be seen at what prices come. Because if you look at the current price of 34 or 35, there will be a huge equity dilution that Yes Bank will have to do. And once that happens, I don't know how long it will take for the stock to come back to this price. So it's the way I look at it, it's a catch-22 situation. You know, whether they go for it or they don't go for it, they're going to be in trouble.
Brijesh, I know it's a very risky call. It's a high beta counter. It's also, I guess, still in the ban period for the F&O market if the traders want to take a bet on. Let's see if with today's move, I don't know if it's a short covering bounce, if it comes out of the F&O ban or not. But on the charts, what levels or what range do you see on Yes Bank for the next few days?
See, the broader range has been concerned, then 42 and 44 are the resistance zone, whereas the downside support has been concerned, then 35, 36 is a support level. And if we narrowed out that range, then 39 and 40 are the immediate basis resistance, and 35, 36 is again support. As you have said, it's a high beta counter followed by the news driven. So purely from a chart point of view, still overall trend has been negative, so better to be on a sell side rather than be on a long side. So at present rate, if someone wants to go on a sell side, I would be suggesting let it rise to 38 around, then one can go on a sell side with a stop loss of 40 rupees and look for the target of 35, 36. Any closing below this level of 35, 36, stock can drift to the level of 32 rupees.
Okay, so that's the range. Technically, if you're still willing to take that risk of trading into a counter like Yes Bank. But Hari, before we thank you, any call, any investment that you would want to share with our viewers?
See, we are very clear. We are negative on banks like IndusInd Bank, we are negative on Bandhan Bank, and we are negative on Yes Bank. Of course, one can argue there's not much to be negative on Yes Bank because it's already quite low. But we stay negative on these three banks. We continue to be positive on the consumer space. So, you know, your DMart may be at 110 times earnings, or your Trent may be at 110 times earnings, but we continue to be positive on all of them, including Hindustan Unilever, Britannia, and Nestle.
So you're willing to pay that premium?
Yes, I think it's worth it.
Are you happy with the earnings growth they've been posting?
Not exactly, but I think hopefully once the rural investments come through and the rural infra comes through, I think that should gradually pick up. But I would rather pay 100 times for a Trent or a DMart than paying, you know, 9 to 10 times for I would say, a dubious private bank.
All right, and in fact, if you thought it couldn't get worse, Morgan Stanley has put a target price of 25 rupees on Yes Bank. Thanks a lot for that, Hari, for joining in. So that's a quick word coming in from TS Harihar. But just about a few minutes to go. Markets are not doing all that badly. There has been a recovery. It's 23 points lower for the Nifty 50 at 12,177. Nifty Bank, though, was not budged. It's still down closer to 1% right now. Brijesh, anything that you would like to highlight? Last few minutes of trade?
Nothing, they've been up. No doubt, Nifty has moved up 30-40 points from a intraday low. But if I talk about the Bank Nifty is looking weak. So banking stock has to perform up. No doubt, SBI. If I check it out in today's session, there had been a gap of opening. But if we look out the SBI chart, the SBI has to cross 340 mark on a closing basis. Then only the positivity for the share would be coming. Otherwise, the stock would be in a range of 340 to 310. The little bit positive sign which has been looking from a chart is Reliance Industry. This is a heavyweight counter, and immediate basis of 1470 the stock has been quoting. I think if it holds on to the level of 1450 around, or say 1445, then the chances are that in coming days Reliance might try to touch a level of 1510.
All right, stay with us, Brijesh. We'll come to you for final closing thoughts, but this is how we're going to wrap up the day. Nifty recovering from the lows of the day, but still going to be ending in the red, 25 points under 12,175. Nifty Bank takes a harder knock. You've got losses coming into the larger heavy-weighted banks. HDFC Twins have been down in today's session. So there has been a recovery for SBI and as well as the Yes Bank, which are up in trade today. However, the Nifty Bank's down about 280 points. Sensex 2 down about 0.25%. Coming to the broader market space, the Nifty Mid Cap and the Small Cap Index are in tow with what the benchmark index is down. So you've got the mid-cap 100 losing about 0.25%, while as the small-cap index is absolutely flat. So a tinge of outperformance there coming in from the broader market space. Looking at individual movers then, and your top gainer is Yes Bank, followed by that is Dr. Reddy's. A lot of positive reports on getting those assets from Walk Hard. Stocks up 4%. Z is up about 2.5%. Titan 2, remember, most technical experts now expecting the stock to do well above 1300. SBI up 2.5% too. Along with that, IT as a pocket and pharma as a space has done well. What's not done well is IndusInd Bank. The selling pressure continues for the stock on the back of that Moody's report as well. Tata Steel is down. ICICI Bank looks a little weak today. NTPC, Kotak Mahindra Bank, and there you have it. Kotak HDFC Limited as well is down in today's session, which is bearing down on the Nifty Bank. BPCL ahead of numbers is down 1%. But the broader market space, I guess, probably evenly distributed in terms of advances and declines also.
Absolutely right, Davina. In fact, I think the only silver lining was that we recovered from the lower levels. So no sharper losses seen in today's trade for both, be it the broader market indices. As you can see, Nifty mid-cap index also closing off the day's low, and small cap also just about closing flattish in trade. Let me take you through a couple of gainers. First, D-Mart continues its upward momentum. It touched, by the way, its fresh highs once again today. So closing with gains of 2 to 2.5%. Shriram Transport, surprisingly, I think its weightage went lower in MSCI, but still the stock had a positive reaction. And look at that, last 15 to 20 minutes of trade, there was some buying coming in, and the stock's finally closing with gains of 4.5%. United Spirits is the other one, which has risen nearly 10% in the last 7 days, and it's been trading at its 52-week high levels. Ircon International, I think this one too saw some buying interest in the last hour of trade, and the stock's also closing almost at the highest point with gains of 14%. Mirza International, that one too went up in trade. I think for majority of the session today, this one sustained its gain even when the markets were pretty weak, so up 12%. Tasty Bite was locked in upper circuit yesterday, post its numbers came, and that up move continued today as well. The counter was up 11%. And Torrent Power, margin expansion of nearly 470 basis points, spectacular set of numbers, hence the up move. On the future side also, we saw significant long position. And Waterbase today was back in action after a bout of correction that you saw for shrimp companies. Waterbase was up about 10%. On the losing side, NMDC, which is corrected almost 20% from its 52-week high levels last seen on January 20th. It was down nearly 4% today. Bandhan Bank, after the recent spurt that we saw on back of the news that its weightage could go up, I think today was the day for some profit booking. GE Shipping was trading weak. I think that one double-digit fall coming in for GE Shipping, down 13%. IGL, MGL were down due to Credit Suisse report, which mentioned open access regulation may impact these companies, and the bottom line could be impacted by about between 12 to 15%. Hence that reaction, but I guess there was some recovery from the lower levels.
All right, so you've got a close for the day, which is down by 34 points on the Nifty. We're at 12,166. The Nifty Bank saw a sharper cut today, down by closer to 300 points at 31,200. Again, if you take a look at what dragged the index, it's going to be your larger banks. Last few days have been supported by Reliance Industries. Today, however, SBI takes its spot. That's contributed about 7 odd points to the gains today. Infosys in the IT pack is doing well, and HUL today too saw a marginal uptick. But lost out was the banks. All across the board, it was the banking stocks that led to the decline on the index.
Yeah, I think barring SBI, everything was down today. Let's take a look at the broader markets too and check how the market breadth panned out. I think no, it was still in favor of the decline. So for the entire listed universe, at least, of NSE, market breadth was still weak.
Yep. Turnover, let's quickly take a look at that too. 35,000, that's it. That's what you've got. So it's almost at par. Today, obviously, the weekly options expiry, 28.5 lakh crores in terms of the NSE F&O turnover that we've got. Brijesh, a quick closing comment from your end. Anything specific, even on the Nifty Bank, if one needs to watch out for?
So another day of consolidation has been going on, but the only culprit for the momentum which is not been moving up is the Bank Nifty, and on a daily chart it has formed the bearish engulfing candlestick, which indicates the selling pressure might be continuing. And as you have said, SBI is only the bank which has been was in a positive territory. Rather others, if we check it out, the private banking or the PSU banking, everything was on a red side. So what I feel for the bank Nifty is the same. 31,450 or 31,500 is a level to be watched. One can keep that thing as a stop loss and go for a sell side. But for the target of 30,900, and whereas the Nifty has been concerned, another day we might be seeing another day of the consolidation. Only the thing is that the Nifty should not break the psychological level of 12,000, or say even 12,070 would be the level which should be watched very keenly. So another day of consolidation might be there for the Nifty has been concerned. The bank Nifty has to be watched very keenly.
Okay. Brijesh, we leave it at that. Thank you very much for joining us this afternoon with your thoughts. And on that note, it's also the end of Countdown. Thank you so much for watching. From Navneet, myself and the entire team that's put this show together. Coming up next is the Market Wrap.